that can cost you time and money. Are you ready? Are you ready to deal with tax season this year without headaches, without trauma, without problems? Well, we're going to help you out by going through some of the most common errors that we see with people filing their taxes. We're going to get started right now and get you all set. Stay tuned.
Hello, hello. Welcome to another episode of Cigars and Taxes. Thank you for spending this evening with us. All right, so today you have your host, Layton Smith, the beautiful Stacey Hoffler Smith, partners of Hoffler Smith Financial Services in Cherry Hill, New Jersey. Yes, we are here today to talk to you about common tax filing mistakes and how to avoid them.
How to avoid them. Key
That is
phrase
it.
there.
Yes. So in this episode, we're going to dive into the most common mistakes that we see in our practice. We are going to make this a fun, somewhat fun, little stressful episode. But as always, this is Cigars and Taxes. So we're here today in Summers Point Cigar Lounge.
Mm-hmm.
Thank you to Steve and Jackie for allowing us to use the VIP room here for our podcast and our vlog.
Yes.
And that's it. Oh, let's talk about the good stuff.
Sure.
What are you smoking and what are you drinking? Jumping into this episode.
Oh, I got a Cosmo today.
Cosmo. Uh-oh.
Cosmo, yes. A little something
I was looking at that purplish
different.
drink. I wasn't sure what it was.
Purple. It's more pink. but
More pink.
I guess it
Pinkish.
depends.
Pinkish.
Depends. And I usually use Kettle One, so that's what's in there.
Oh, Keller One Cosmo. Okay.
Yes.
And what you smoking on?
I have a Java cigar, one of the small ones. Again, an infused cigar. It has a nice mint coffee flavor to it.
Really?
Yes. So
And it's
they're
small.
It's small. I smoked the big ones too, but the larger ones. But I just bought one of these little tins. that
Okay.
have- I think is there 8 in here? I can't remember.
Well, all right.
But I don't
That's
have that
nice.
many left. I only have 3 left.
Oh, you done ran through them.
That's it.
Okay. Yeah, a little small cigar. It's kind of
Yeah.
blunt-like.
Oh, wow, that's I don't. That's
They're
not-
cigars. They're cigars. They're
They
cigars.
are
They're cigars. They're
Yes,
cigars.
I just showed you the tin.
I know.
Here you go. Okay.
Well, I am enjoying. This is a Ave Marie. I'm not sure which one this is. I really love the Ave Marie Reconquistas. This is not a Reconquista, but it is Ave Marie.
Mm-hmm.
It's a shorty, kind of like a short story
Mm-hmm.
or a nub, a shorter stick. Medium body. Pretty good. I love all the Ave Marie lines, honestly. So
Okay.
they're great. And we got our true to the form drink, Balvenie 12 triple cask. We're about to get in this. All right, so common tax filing mistakes and how to avoid them.
Tax filing mistakes can lead to issues like delays in processing, delays in getting your refund, missed deductions, or even penalties. And if you have balances due, it could make it so that there's an increase. You have increased interest. It's better to try to avoid mistakes as best you can. So we're going to get into the couple of errors. Actually, I think we have, what do we got? We have a few.
The number of mistakes? How many you
Yeah.
got there?
I'm trying to remember. Yeah. Oh, we got 10.
10. That's a good
10.
number.
It's
I think that's our number. We have 10 of these.
I try not to go over 10. There's probably more. And then, so we'll start with these, and then if we need to do another episode, we
So
can.
yeah.
Okay?
So this is this episode is based on questions we got.
It's
And
some questions we've got, and we got, and also things that we've seen throughout,
Mhm.
just with our clients.
But these weren't questions, like we had an episode where the questions were, we did like a myth, myths.
We did.
It's okay. So these are questions that folks, they have problems. They had problems because of math errors or other errors on the return, and they sent in a couple questions. And I think you just took those questions and you developed this episode
Yes.
based on that. All right, so good stuff.
Okay.
Let's get it.
All right. So the first one is incorrect personal information, meaning in the way you have your name listed, social security number, or address. Now, I want to preface by saying, if you're using
Software.
software
That normally picks it up.
and you are e-filing,
That pick it up.
you will pick up a lot of those types of errors. What you won't pick up is the address. So if you are a person that normally receives a refund
By paper.
and you decide you want to get a check by paper in the mail, you better have your address correct. Because it's all well and good to get a refund, but if you got to chase it all over.
Well,
to
it is no
find-
chasing. Basically, it goes to the wrong address. It gets sent back because the
Right.
post office won't deliver it.
Right.
Then you have to call the IRS, have them cancel, reissue the check.
And for
And mail
me,
to you.
that's called chasing a refund.
Yeah, then you have to do a change of address form with
Yes.
all that good stuff.
Yes.
But the first part, which is incorrect personal information, normally if you're using software and you put in name, social security number, date of birth, if it's not right, it doesn't match social security, it'll just kick it right back.
If you're e-filing,
Right.
they'll kick it right
If
back.
you mail it in,
They may fix it, they
may
may
not. Yeah, that's
Yeah.
that's a
Right,
flip in the dark right there.
right.
But you know, and you would figure that you don't have this many of these errors now. But I'll be honest with you,
You do.
we had a client. This was just maybe a month or two ago, where she has like 5 names, and the last one is like hyphenated.
Right.
And Lord, we couldn't get that thing right because the first 2 names was actually her first 2 names. That third one was like a middle name, so it was an initial.
Right.
Then the last one was hyphenated, but it was
Right.
like a name and then another hyphenated name.
Right.
Oh my God.
Yes.
And she did not have a social security card, which made, one time you come in, it's like, all right, we need your driver's license, social security card, boom, boom, boom. She didn't have a new social security card once she had the name change done.
Right.
And it just made it, I think we played with trying to transmit that name and get it right like maybe 4 or 5 times. And it was almost like, look, lady,
Right.
what's your name? Okay, is this fraud? Are we dealing with fraud here? I want a social security card, So, but
Literally, this is a personal information. Having that name and social correct, with a business return, you can run into a similar issue. Usually it's a new business,
True.
And sometimes we'll see where they've incorporated it one way and they've modified it, and they haven't officially made it
Yes.
a trade name, but they've modified it. They usually refer to themselves as
The trade name.
Right.
Right. So, okay, so dealing with that, the issues that we normally see on the corp side is because they created a C Corp. They have in there that they filed a 2553 to be an S Corp, never got the approval back, maybe they never mailed it in, whatever. But we're trying to create an 1120S. And they are not listed as an 1120S. It's either listed as a C Corp or it's listed as an LLC, something like that. We'll have that issue. The name convention, don't normally see that as an error many times with the IRS. I haven't.
Less so with the IRS. They will go by whatever the EIN number is.
Well, the EIN, yes, the
The
EIN
SIC
matching
number.
if the name convention is at least,
Close.
yes. So,
Now
you
the
know.
state,
Oh,
not
good
always.
Lord, good Lord.
Not always.
But the
so
one thing
bottom
is,
line is try to have those things correct.
yeah, and you got to understand when we're filing the returns for the corps, normally we have the SS4, so we have the actual with the IRS submitted. It's that they created a trade name afterwards,
Right.
within the same year, but afterwards, and
Right.
it didn't take, or it wasn't filed properly, or it's not on the system.
Right.
And we're just using the SS4, and normally we don't have the trade name in there.
Right.
I don't even see that as an issue most times because you
Most
don't
of
have
the
the trade
time
name;
it's
it
not.
doesn't kick back.
Most of the
But
time it's
sometimes
not.
we have I think over the last 22 years, I might have seen that like 4 times.
Probably that's about
Yeah.
it.
So that's not a big issue
It's not
with
a
the
big
corps.
issue.
That's an
It
issue
doesn't-
with the individuals.
Right. Right. So second one, math errors. Meaning you basically add or subtract incorrectly. Again, software.
That's it.
Your
So
software can be your friend.
That is it.
Yeah.
So, math errors, it's always cute when, you're taking your adjusted gross income, they go into the tables to figure out what the, yes, or earned income credit. When they're
Right.
doing it by hand, they're trying to figure the earned income
That's
credit.
Yes.
Yeah, that's where you see those math errors,
Yes.
when they're trying to calculate those.
Yes.
But what normally happens there is the IRS will just make the adjustment.
They will.
Sometimes you get that CP22A, change your refund or whatever.
Right.
But most times they'll just make the adjustment, adjust the refund or the liability is due, and then send you the letter saying pay this amount, or they will send you the reduced refund.
Right. And,
Yes.
ultimately though, there's going to be a delay if they have to go through an extra step like that.
Mm-hmm.
So it may not be terribly significant, but there is going to be some delay because they have to go
Yes.
through that extra step. Okay. All right. Missing or incorrect forms. I'm on number 3 now.
That's a
Okay?
good one.
Failing to include all necessary forms like W-2s, 1099s, 1098s.
So
The-
we're,
and it-
we're still
and-
talking about people filing by hand.
Well, not necessarily, because if you leave out a W-2,
Okay.
you can leave out.
Now that's a bit different. All right. So when we're not talking about math errors, we're missing forms.
Missing forms.
So you leave off a W-2. Okay,
like
got
a
that.
1099.
Oh, you
or
leave off a
W-2,
1099.
Or
All right.
1098.
All right.
Sometimes leaving out these forms, these are your source document forms. Sometimes it can be something that when corrected or omitting it can hurt you, and other times
It's going to hurt you again.
it's going to
So,
hurt you.
so basically, what you're referring to is when somebody has 3, 4 W-2s and they leave one off, so their taxable income has been understated,
Correct.
and now it needs to be modified because they left a W-2 off. So what I thought you were going with was when you said leaving out forms. I was thinking, we get the individuals that file by hand, and they will leave the Schedule B off.
Right.
Or if they're itemizing, they don't include the Schedule A, okay? And they send in the return, they're missing that particular form, but it is, it is calculated on the 1040, right? But it's not there, so that's what I thought
Yes.
you were going with that particular question.
No, this was for source documents.
Leaving off W-2s and 1099s. Yeah, well, listen, here's a real interesting thing. Let's just say you have 4 W-2s, and one of those W-2s is like, let's say it's $100,000, okay? The other 3 is like 60. So you file your return with the 3 W-2s that show you have $60,000 in taxable income. You forgot that last 4th one that has a whole another $100,000 on it.
Yes.
That is a massive, massive, massive omission.
It's a massive oops.
Yeah.
If it wasn't oops.
It normally gets picked up
It does.
quickly.
Yes.
So a lot of times what will happen is, back in the day, and I got to go back because I haven't seen that in a while, but we go back like 10, 15 years, we would see where folks, they filed returns, they had certain W-2s, because one W-2 was left off, or 1099 and a Schedule C was left off, they qualify for like earned income credit, child tax credit, all these other credits that might have been there for them. And then when you add that one that was omitted to the return, they do not qualify
The income
for those
increases,
credits.
so they're not in that, they're phased out. as
Yeah.
credits.
Tax avoidance.
Yes.
Well, we're not going to go there. We're not going to go there. But yeah, missing or having incorrect form. Like I said, I read that question a little different. I was thinking like they left off their Schedule B or something like that. But we're talking they're leaving off source docs.
Yeah, leaving off source docs. Now,
Don't do
it
that.
could be there's other things that you could leave off, like your student loan interest that could help you. You might leave out daycare expenses, childcare costs, and that's something that would normally help you.
And the IRS is not going to fix that. You're going to need to amend the return.
No, you will not get any, if it's income that's left off, you can expect that the IRS will be sending you a nice little notice about that, saying, hey, you forgot this.
Yes.
If it's something that is going to result in a deduction or credit for you, something that's going to help your return, that's likely not I mean, you're not
Sometimes
gonna
they'll
be-
make the adjustment, sometimes. But most times you need to amend the return.
You need to amend the return to get that,
Yes.
you know.
All right, so what's the next one?
Okay, so number 4 is not reporting all income. So that's kind of a subset of the missing or incorrect forms, okay? That's
Yes.
specifically that you are leaving off W-2s, 1099s, K-1, something that is additional income, and you're making a, and that is being omitted from the return. I have to say that we often get questions. Client might say, "Oh, you know what? I think I forgot that. Do you think it matters? Do you
Right.
think they'll pick
How much?
that up?"
How much was the 1099 receipt? I don't know, 80, 120,000.
You know,
Yes,
"Shoot,
that
it's
matters.
20,000."
Yes, yes.
Yes, yeah, yeah.
I've had the more egregious ones, but still, yes, it matters. Yes, it do.
It matters, and yes, the IRS, you should expect a letter, oftentimes within the year.
Oh yeah, they pick
You
that
know,
up very quickly.
They pick it up pretty quickly, so it's not a if they pick it up, it's a when.
Yeah, and see,
Okay.
these are rough questions.
Yeah.
These are the questions that drive us to drinking and smoking. That's literally why we're sitting in the cigar lounge right now, because we have
No.
questions like this.
So specifically where we see the income documents left off, sometimes W-2, sometimes it's interest, sometimes it's retirement with distributions, capital gains, so stock income,
Right.
so stock
So
you had
a lot of times, well, I've seen this. You know, this, with the joking aside, we've had situations where we had individuals receive K1s
Yes.
late. Okay.
I don't know that, very few people who receive K-1s receive them on time.
Yeah, but they receive them late,
Yes.
and you know, one was left off because they have multiple K1s they receive.
Right.
1099s is another one. Normally, though, we are calculating their revenue, so we have the right revenue, even though the 1099 wasn't included.
Right.
But if we're not doing accounting for them, and they just come in, they have two 1099s that show they got 150,000. That's what we're picking up.
Right.
We're literally relying on the client at that point to go, no, my gross revenue wasn't 150. It was more like 300. Like, oh, okay. Well, we're missing here.
We do use the bank statement just to calculate their revenue coming in, but we have had individuals that are new to us, and maybe they have 3 bank statements, but they only give us 2.
Aha.
You know,
Aha.
so, you know. you
Now,
have
we don't
2.
have this problem often.
Not
These
really,
are just
not
a
really.
couple.
They're a couple.
that
And to
we've
be
seen over
honest,
time.
If it ends up being an issue that comes up, you know what? I don't want to say, you know, I guess everybody has to find the best fit for whatever account's going to work best for them. And we need we need people that give us the information. We can't do our job properly if we don't have the information.
That's it.
Yes.
What she's saying is stop the tax avoidance.
Yeah.
Yeah. Okay.
Yeah.
What's the next one?
Let's
What's
be
the
real.
next one? What's the next one?
Okay, number 5, overlooking deductions and credits. And so, again, that's sort of a piggyback on what we were just saying. It's kind of a subset again.
True.
So instead of the income that's being missed, we're looking at the deductions and the credits, which always help you.
Yeah, and to be honest, in today's world, most folks are using software. Okay, certain deductions, certain credits, you know, is based on education, children, the itemized deductions and such. So you should not. You can miss them, of course. Yes, you can.
That's several times when people, clients of ours, maybe this is their first child that is gone. Either it's a first child, so maybe it's early in the game and they didn't know that they could use their daycare costs on their return.
True.
For someone who has a child going to college, they didn't know that they could, you know, use the education credit. And when they're coming to us, we're kind of like, hey, didn't you tell me your kid was in school? Why didn't you, I don't see it on here. You
Or is
know,
it
did they get a
1098?
scholarship? You know, and they're like, oh no, how do I go about that? So if we look at it and determine, does it need to be amended? But that is definitely overlooking and
I
missing
gotcha.
deductions.
So that's the difference between my clients and Stacey's. Because mine walk in there with 3 kids like me, I'm like, yo, all them jokers in college. How much I'm getting back for this, okay? You know, they're not overlooking or missing anything. They already know. So, but
Okay.
still.
So, next one is filing status error. So the fix for the deductions and credits
Mhm.
is make sure that you try to talk. If you do the research on your own, great. But it doesn't hurt to talk to a tax professional to go over your situations. In most cases, you know, they're going to know what you should be looking at and help make sure that you're pulling everything together for them to do the best job on your return. That's what I hope that they're
Right.
doing. Okay. 6, filing status errors.
How is that an error?
Choosing the wrong filing status.
Okay, so you might see that sometime when you get the folks who they might have just got married, but they don't want to file a return with the spouse, so they file head of household again instead of married filing joint. But that's the only time you're seeing something like that. Okay, that's the only time I see.
No,
All right,
I
go
mean,
ahead and tell me what you got on that.
There's other times where, let's say it's a married couple and they're separated and they're not really talking to one another.
Okay.
Okay, and you got one that files and the other one's later files.
Okay,
And
so
now we got to figure out what do they do.
yeah, let's
You
give
know?
some examples of that. So
Yes.
the big thing is this: you're married, but you're separated. So you're separated and you're in different residences.
Correct.
Depending on the number of months that you lived apart, you can file head of household because you're not living in the same
If you
residence.
have dependent children,
Yes.
you can.
Now, you take a situation where so we had the one clients where they normally file married filing separate. And the husband was a client of ours, the wife was a client somewhere else, and they filed a joint return with her, and with him on it, with only her income.
All right.
Yeah, and that became a big to-do because, now she filed a joint return with him. We were trying to file a married filing separate return with him. You had to go forward with either doing a superseding tax return
Right.
or just amend it and make it a joint return.
Yes.
You see, those are weird scenarios.
So-
We don't have many of those. Most times when we have married filing separate, we have both clients. They're married filing separate, but that one instance where we have one and
Yes.
the wife went somewhere else and they filed a joint return with them.
What I have seen is when we have issues with filing status, it's usually something has been done already, and they're coming to us to fix it.
Mm-hmm.
Okay, and it's messy, and it just needs to be fixed, and they got to figure out.
But it's always married folks.
Yeah, it is.
It is always married. Okay, yeah, I'm about to say, it's not the other ones, it's
It
always
is.
married. Okay.
Yeah,
There we go.
If you're single, you're not putting down.
Yeah,
that you're
there it
married.
is. Yeah,
You
that's
know,
it. It's always the married ones.
You got a couple choices there.
It's always the married ones, and
It's either
they're doing
single or
married
head
filing
household.
separate. Yeah.
Right. So yeah, that definitely is it's a married thing.
Okay.
Okay. All right, but again, talking to your tax professional, that's key getting through these situations. If you're gonna have questions, rather than just go forward with, gee, this sounds right to me, I would definitely, if it's not straightforward, you should definitely talk to your tax professional.
True.
To get some guidance. A lot of times it's harder to fix it on the back end than just waiting and taking the time to do it.
And
correctly
I'll
the
also
first
say a
time.
lot of times with those married couples, and we have those issues, we are also talking with the other accountant.
Sure.
Okay, especially when you have the whole dependence where,
Right.
let's say it's one and odd years the wife is taking a child, even years the husband's
Correct.
taking a child,
Right.
and then they're splitting whatever the care, who's taking the care. A lot of times
Right.
we're in communication with the other accountant filing that
Exactly.
return so that the returns are filed correctly on both sides.
And that's super helpful too, because from one accountant to another, we know the questions to ask, the areas that we're going to be concerned about.
Yep.
And we can better communicate it to our client and that accountant to his client.
There it is.
So keeps everybody on the same page. All right. 7, neglecting to sign and date the return.
Oh, they just mail it back to you. That's it.
Yes. But again, delays in processing.
Mm-hmm.
Okay.
Well, it's not even a delay. They will not process.
Okay, so which results in so basically you're thinking you're done and you're not.
And this is a return that was mailed in.
Yes.
So this whole episode is to you number 2 pencil and IRS form filling out individuals, or you don't even have the forms you fill out. It's all PDFs now. You fill them out online and print them out now.
No, listen. If someone is using software, but let's say they're doing back taxes, they haven't filed for a few years. You can only e-file the last 3 years.
Yeah.
So if it's a prior year to that, they could have used software
And printed it out, but didn't sign it.
And they're figuring, let me just drop this in the mail, not realizing because for the e-file ones, you don't need to if you're doing it yourself.
Or it could be like our Connecticut office that Stacey father runs, and they do everything.
Careful, man.
Okay.
That's my dad.
He likes hand filling out all forms, even in 2024.
He
Fill them out by hand, scan them in, send them over to the office to be reviewed, and then we go through the return. We're like, bruh, you really need to stop this. All right, just send us the source documents.
He made this shift a while ago, but it was pulling him across the finish line. Though.
That's it. But it's a family affair.
Yeah.
So Layton
but to
Jr.
Be fair, he was quite, my dad when he was doing taxes by hand.
Oh, he was a beast.
He was a beast.
Back in '78, he's still a beast. Charles E. Hoffler is a beast.
See, as soon as these cameras go off, you get busted up.
Okay. Ain't nobody talking about your daddy. We good.
You are talking about. I'm listening to you say it right
Oh
here.
God.
Okay.
Well, the good thing is this is a family affair. So right now, Layton Jr. does like all of the data entry, a lot of data entry for your father.
Yeah.
So, hey Layton, give a shout out to Grandpa Pop. Grandpa Pop.
Yeah, that is not what he calls him.
What do you call him? Gramps. Okay.
Love you, Gramps.
All right.
There it is.
There it is. All right. Anyway, neglecting to sign and date the return. It's only an issue for returns that need to be mailed in. So if it's one that you did by hand in this century, you don't need to do them by hand. That's just penalizing yourself and torturing yourself for no reason. I would never suggest that. But even if you did it with software and it's beyond 3 years old, one of the prior years that have to be mailed in, any return that is being mailed into the IRS needs to be signed and dated.
That's
so
it.
If not, they will kick it back to you.
Mm-hmm.
The other thing is, it takes a decent amount of time when you are sending in mailed-in returns anyway.
I mean, it's like 6 weeks for processing for a mail-in return.
But the thing
So
is,
you mail it in, they wait 4 weeks, send it back to you, and then you mail it back in.
Exactly.
And then, so all of a sudden, the 6 weeks then turned into 3.5 months,
Exactly.
4 months.
Hey, listen, it's better than it was COVID time. That was terrible.
Oh my God.
We're better now.
Yes, that's true.
All right, so anyway, number 8, not keeping copies of your tax return. Okay? Now, this doesn't have to result in an issue. It results in an issue if there's items on there that kind of roll forward or that you need to reference from the previous year.
Mm-hmm.
Okay?
Yeah, like a loss roll forward or
Exactly.
capital gain loss.
Mhm.
You hit the limitation.
If
Yeah.
you're switching accountants and you have depreciation on there for.
Oh my God. Yeah.
Yes.
Yeah.
It would be helpful, Jesus, it would be helpful to have that depreciation schedule
That's it.
included. Okay, so yes, keeping copies of the prior year return. Did you say capital gains loss forwards? Right?
Yeah.
Okay.
Loss roll forwards. Yes.
Those are some of the things that come.
Yeah.
you definitely need those. Usually helps, just in terms of continuity, and so you don't miss anything.
This is true. This is true.
Okay.
And having copies of your returns for later on if you decide, you're going to buy an investment property or, you're going to refinance and,
Yes.
you done this damn thing by hand. And now you need a copy to return to send to the bank and you don't have it. And I guess the best you can do at that point is get a copy of your transcript
That's true.
from the IRS. Yeah.
Can,
Yeah.
So good store copies. People have asked me how many years. I just normally say 3 to 5, but it depends on the.
I mean, you should have, normally I'd say you keep 7 years.
Okay.
Now that might be a bit old school and I never updated that, but I'd stick by my 7 years.
Listen, I'm kind of a pack rat, so.
Yeah, Stacey got the last 34 years.
Thank God.
Easily accessible.
Look here, thank God we're able to have things scanned in now, so I can have less paper,
But do you have less paper?
I do, thank you very much.
Oh my God, what did you just say?
I do,
You said you have less paper?
yes.
So,
Listen,
Stacey
listen,
Hoffler
listen.
Smith just said she has less
I
paper.
absolutely do.
Right at you.
Look here, you can actually see my chest now. True.
Oh.
Yeah.
Okay, yeah. You don't have as much paper sitting on your desk.
There you go.
Listen, that is a family thing. We're gonna talk about Charles again.
Oh.
And the paper.
No, you are not. Let's go.
Okay.
No, you are not.
Okay.
We're not doing that. Okay. So, number 9, missing deadline. Don't miss the deadline. Okay. Don't miss the deadline.
Call on June 25th. What was the filing deadline? When I had to go in by? Was it? Did you file an extension?
Yeah.
No. Well,
Yeah.
it was due April 15th, April 18th, whatever it was.
So regular 1040 returns are the normal deadline is typically April 15th or thereabouts. It may be adjusted if it falls on a weekend or there's a holiday, something else is happening. During COVID, they did.
It had a rolling number.
It was,
Rolling.
One year they moved it to
God.
July.
I have no idea.
July 15th, and it was May 15th the following year. So that was just super unusual.
Okay,
But
I don't even remember that.
I do.
Yeah,
I do. You know what? So, as an accountant, most of us really look forward to April 15th and kind of an ending of the tax season, or that portion of the tax season.
that's right. So
I personally, when I heard that they were going to extend it to July, I was like, oh no.
So you gotta understand, I'm not an accountant. I am a problem solver. So I do not fall into that little dates.
We normally go
I'm
on vacation
done.
right after.
And we went on vacation right after. It didn't matter what the date was changed to. The vacation didn't move to May or June or July. We bounced.
We couldn't go anywhere. April.
Didn't we go to Punta Cana?
Yes, but we didn't do that until July.
Oh,
It
Okay.
Yeah, but everything closed down anyway. It was COVID. There was no flights anywhere for a while.
that's true.
So,
That's true.
but we didn't go till then.
But that was a good vacation.
It was a good vacation.
We had a wonderful. Oh, he's going to be a guest on one of our episodes, Jonathan Fiant.
Oh, yeah.
He owns J. London Cigars. And this dude, wonderful. So that year was Stacey's 50th birthday.
Yeah.
And
So now my age is out there.
oh my God, I didn't say it. So Jonathan, wonderful. Love you, dude. Wait till we get him on the show. But he was at the house and we were just eating some steak and smoking and drinking. And he goes, "You're not doing nothing for your birthday, Stace? You know what? I'm going to go to Dominican. And what I'll do is this. When there's a break in the COVID laws so that they're not doing the testing coming in or going out over here, I'll let you know. But we got to be ready to move in like 24 to 48 hours.
Right.
And Lord, Stacey's face lit up like, I really want to go to Punta Cana. Okay.
I wanted to go.
Oh my God. And this dude literally called us on a Wednesday. I was like, look, We need to fly out Thursday night. They're not doing the testing for whatever, a window of 2 days so we can get in. And we're going to have to stay there for however long we got to stay there. But when the window opens up that we can go, we'll go.
Yeah.
Oh my God.
It was something.
So, like I said, I don't even remember those deadlines. I just know that
I remember that.
we bounced.
I remember that because I was, yeah. So anyway, point being, pay attention to the deadlines. Pay attention to the deadlines. And at this point, I'm really talking about income tax. There's other types of taxes, deadlines for tax returns of any sort are important. For your 1040 returns, April 15th, and if you get an extension, if you need an extension, request it by April 15th. It gives you an extra 6 months to file.
That's
to file, not to pay. If you have a balance due, that you're still going to get penalized for failure to pay.
Right.
Okay. If you have S corp partnership, if you have a business return, most business returns are going to be due on March 15th. And if you need an extension,
September.
you need to request it by March 15th. And it's going to give you the 6 months too.
September 15th. And as a side note, we love J. London cigars.
Yes, you do.
And we're going to have a good time when we get Jonathan on this show.
Yeah, we are.
That's it. Anytime you want to slide out the country and go somewhere, like Putacan or something, call Jonathan.
Yeah.
Yes. He literally have jets sitting on standby.
Okay, moving on. All right, to our last item.
Okay.
Ignoring changes in tax law.
He say ignorance is bliss.
But not so much. You gotta stay up to date on tax laws. I gotta tell you, when the Tax Cuts and Jobs Act happened, 2018 is when that went into effect. There were massive changes to 1040 filings for most people.
We had all those jokers running in trying to still file a 2106 at that point.
Yes.
Unreimbursed employee-related expenses, like,
so
bruh.
many people came in, and by the time and walked in and said, "I heard I can't claim my union dues anymore. That can't be right." I was like, yeah, it's right.
Yeah,
it's
they're sitting right there like, I just watched Trump on this station. He said you can.
Yeah.
And it's like, yeah, no.
But keeping up with those kinds of things. Now, that particular year was massive. Change. I don't know that I'm going to go through all of it here. But
No, we're going to do a whole episode on that because
Okay.
the sunsetting of the Tax
great.
Cut and
Yeah,
Job
no,
Acts, that's 2025.
That's good.
George Dandriff, we're going to have that bro
Oh,
on
good.
for that episode.
Nice.
He loves that topic. He loves that topic. I have no idea why he loves it so much, but
Well, I
we're
love
gonna-
that topic too.
Yes.
It kind of.
the planning around it, if it's not extended, if it's not extended and it rolls back, what does that look like for everyone?
Is that on the table?
If it's not extended,
Oh, you said if it rolls back, like. Okay.
it sunsets in 2025,
No, I know.
which means it'll roll back.
Okay, that's what you mean. Okay.
Yeah.
Okay. So, okay, but you definitely want to keep track of that, and it's not just on the federal level. State changes, changes occur at the state level as well.
True.
There's certain things that change every year. Standard deduction changes every year. There's certain pieces that will change on the tax return every year by a little bit here, a little bit there. But other items, I feel like the residential energy credit has been a moving target since it first came into existence as to what you can claim, how much it's going to give you. and
Yeah,
whatnot.
that has,
It
it's
literally-
been a moving target a little bit.
Yes.
But, the other thing is this, it's one thing if you are doing these returns on your own, you don't have any, so you don't have a professional working with you, and you're not even using software, you're doing this by paper, which means you need to familiarize yourself with those changes. It's a bit daunting if, that's not your area of expertise.
Right.
A lot of times we'll tell folks, you need to consult with somebody.
You really do.
Yeah, especially if you still want to do it by hand, but still consult with somebody, pay them for the consulting time so that you can have everything, at least in theory, you have everything lined up correctly, and you're not sitting in, 2024 going off of 2010 rules and regulations as such.
Numbers, all of that. Yeah. So and it's particularly if you have something new that's happened with you. A lot of times we'll see people that are used to doing their own return. They always have one W-2, they always have one child, and they don't really
So they always have one child.
one child that they're including on the return, and so their return doesn't change that much from year to year. But when you run into a year when it does change, there's something that's different on there. There's a whole host of reasons why you should be looking to talk to
A professional.
A professional. When COVID happened, there was significant changes.
That's true.
That child tax credit thing,
Thing? Yeah.
that was a headache. That was a headache.
Because it was in advance. They were mailing out those checks.
I did a whole video on it.
Oh, that's true. That is on our YouTube. Yes.
Letter 6419, where basically they did increase the child tax credit, and then they divvied it up so that 50% of it they gave you that current year. You didn't have to wait for your tax return to do it. But when it was time to file your tax return, you got the other 50% of it. But they had increased it that year.
That's true.
So these are things that it's good to know. I think during the whole COVID period, we were getting so many calls and emails. I heard this. What about this? And
I ignored most of that. I just ignored most of it.
I feel like
Stacey and the wonderful staff at Halford Smith, they took care of all of those items.
I was
Yes, they
trying
did.
to keep everyone up to date because it was like rapid fire.
Oh yeah, I remember. You had that software called Loom, and you were doing the Loom videos and throwing those up.
Yes.
Now, and while she was doing that, I was sitting in the yard smoking.
Smoking a cigar. Yes, you were. So, in any case,
Waiting for the audit work to come back.
Wow. Okay. So, in any case, we're done with this installment of common mistakes with tax filing.
This was a good episode.
Yeah, I thought it was.
You shined. You shined very much.
Oh.
Oh, there it is.
Well,
I gotta say something. I was talking about her daddy earlier.
Yes, you really were. Not cool, man. I don't think.
Well, as always, Cigars and Taxes is meant for entertainment and purposes.
Well, I guess
even though we're giving you,
out this time, right?
even though we're giving you good information, some knowledge, but please always consult with your financial professional, your CPA, your EA, your tax attorney about any of these items that we're talking about, making sure that it fits your situation perfectly.
And I just want to say thanks for joining us, and hopefully you learned a few things that will help you sidestep some of the pitfalls that people fall into with doing your taxes, running into errors, creating delays, and creating more problems for themselves. So,
True. So what Stacey is saying is, give Halford Smith a call. Stop fooling.
yes.
Yeah. So, hey, listen, if you like these episodes, you think they're informative, you want to see more, please hit the subscribe button. Every Thursday, a new episode will pop up. We appreciate you joining us today. Hopefully, you had a wonderful stick and a wonderful drink.
Yes.
And we had some Cigar Lounge tax talk.
Yes.
Yes.
Give
We will
us
see
some
you.
feedback, and we'll see you.
We'll see you next time.
Next time.
That's it.
Take care.